All right, welcome to Community CPA's Saturday webinar. We're going to continue our webinar series on IRS ERC Compliance. Let me quickly share the screen so you can follow along quickly or easily. All right, so as I mentioned, so we're going to talk about ERC compliance. So we had two other webinars already. So this is the third one in our series. So we're going to talk about some mistakes that we have seen that IRS made in the ERC processing, in the processing of ERC claims. All right, so that's myself, Steve Howe. Have a PhD degree and was a professor, and currently I'm working at CommunityCPA.com. Our phone number here of the firm is 515-288-3188. Okay, a quick disclaimer as usual. So if you're just listening or attending this webinar, that does not form a client relationship with us. So we will not be responsible for your own undertaking, for doing whatever you're doing, following those webinars. Okay, so if you do need specific services, please seek assistance from qualified professionals, and including our firm. So you'll be welcome to become our clients. A few words about our firm. So you can go to our website, communitycpa.com, to find information about our firm, as well as the past and future webinars, including today's. And so we are a regional CPA firm with 3 offices, 2 in Iowa State, and then 1 in Minnesota, state of Minnesota, up in Minneapolis. So we as a CPA firm provide the full suite of CPA services such as accounting, tax preparation, and payroll. And we also do financial statement audit. And also we do other related business and legal consultations. So our staff collectively speak, I believe it's actually 11 different languages now. And so we do serve the client in different languages. And so if you need services in other languages, please feel free to reach out to us. All right, so we're going to talk about the ERC compliance. So the reason we introduced this series of webinars is that IRS on September 14th issued a moratorium that temporarily suspended the processing of all new ERC claims. And as a matter of fact, we believe IRS has suspended the processing of all ERC claims, both the pending and the new ones, simply because, IRS in that moratorium also announced that, IRS is going to process the pending ERC claims with increased scrutiny and additional safeguards, and also will allow those with pending claims to withdraw, or allow those with who already received ERC but now determined that they are in those claims were improper to pay back, because IRS is allowing those things. So we believe IRS, and then the details for the withdrawal program, for instance, is not announced yet. Okay, so IRS did say that withdrawal program is forthcoming. The details of that program is forthcoming. So then to allow the ERC claimant to that opportunity to withdraw their improperly filed claims, so then of course IRS will have to stop their processing for all the pending claims in order for that withdrawal program to be meaningful. Okay, but anyway, so the IRS also has started, so in fact IRS did say that even back in July, it started already the audit and investigation of improper or fraudulent ERC claims. So then to help our clients and audience in general to better, either self-check their eligibility and compliance with all the ERC rules, and as well as to help our client and the general audience to be able to better deal with an IRS ERC audit. So we are doing this series of webinars. And then today is the third of this series. So if you are following our webinar series regularly, you probably should have seen already. And in the first one of those, we talk about the requirement to file income tax return amendment if you claimed ERC. Okay, so and also that the income tax amendment is not to be confused with the 941 amendment in order for you to claim the ERC. Okay, to claim the ERC, you're doing a payroll tax amendment, which is a 941X. Okay, so we may use 941X to amend the original 941 you filed, and that's employment or payroll tax amendment. But if you claim the ERC, you also are required to make income tax amendments. So, okay, so these are two separate kind of tax amendments. We have seen clients that are confused already. So, we filed an amendment to get our ERC, and why do we have to do another amendment? Okay, so then you actually, to claim ERC, you did the payroll tax amendment, but as part of the entire ERC program requirement, you are also required to do the income tax amendment. So, in fact, to amend your 2020 and or 2021 income tax returns, and depending on whether you claimed ERC only in 2020 or in 2021 or in both years. Okay, so whichever year of the 2020 and 2021 you claim the ERC, so then you do need to go back to amend that year's income tax return. Okay, so we did talk about that in detail in our first of this ERC compliance webinars. And the other, in the second one, we talk about, how do you qualify for ERC by the government order criteria. So then the third of this, which is what we're doing today, is that so IRS also, does make mistakes. Okay, both at the agency level and as well as at the individual processing or specific processing agent level. So that's what we'll be talking about today. All right. So we'll be talking about some of the IRS errors we have seen or experienced. Okay, I put errors in quotation marks, but as you will see momentarily, some of those are not exactly errors, but it's more of a position that IRS is taking that we don't believe that's fair to all taxpayers. But just to make the presentation or writing simpler, so we will use simply call all of those errors. But not all of these are actual errors. And also we divide those errors we are going to talk about into two categories. One is agency-wide, and then the other one is at the processing agent level. So then we have the 6 items here. So we put 3 under the agency-wide category, and then we discuss another 3 under the processing agent level. And okay, so let me go through each one of those 6 items in details. All right, so instead of trying to summarize them now, but this is a quick summary. But so we are going to talk about each one of those in detail. All right, so as I mentioned, the 2 categories. We'll first talk about the IRS agency-wide level errors. Again, so remember the errors is in quotation marks. Okay, so especially at the agency levels, they are not necessarily errors, but more of a position that IRS is taking that we don't feel is fair. All right, so the first in this category is that IRS seems to assume that almost all pending ERC claims are improper. Basically you're ineligible and you claim anyway. Okay, so that seems to be what IRS is assuming. So in fact, the exact percentage that IRS refers to in its the announcement of the moratorium was 95%. Okay, so basically IRS considers 95% of the claims, of the pending claims, are improper or ineligible. And so we understand that IRS has in its September 14th announcement of the moratorium, IRS did lay out the reasons, the background of why IRS was announcing that moratorium. So the main concern was that there was those so-called ERC mills or ERC promoters, aggressive and unscrupulous marketing, and so that led to a huge amount of filing. So many of them are improper. In that regard, we agree with IRS. But we believe that percentage may be, may not be fair because we believe there are a lot of properly filed ERC claims that are pending. And so, so if the IRS is assuming that practically all pending ERC claims are improper, so then of course, so that will lead to undue burden and undue processing delay for those legitimate claims. And so, we do have quite a few that will submit their claims in May or June, and so that are pending, and then which we believe they are legitimate claims, but they're stuck, so they won't be processed until some months later. And so we think it's not fair to those. Again, so this would be one of those items that's not an error, but we think it's not fair to some of or even all of the taxpayers. All right, and the other position that IRS, or I should say an effort that IRS is making, seems to be IRS is seeking to terminate the ERC program early. And so in fact, IRS specifically mentioned that. So because IRS, in their own words, they believe the current filing deadline, which are the April 14, 2024 for 2020 ERC claims, or April 15, 2025 for the 2025 ERC claims. So IRS believes that those deadlines, because they are still yet to come, so pose additional risk to the tax system, meaning that these give those people that would be making improper claims more time to do that. Okay, so that's the reason why IRS is trying to seek early termination of the ERC program. And so IRS explicitly said that it's making an effort to potentially putting an earlier ending date for business to claim the ERC credit. And so we believe that's not unfair because it's a tax credit available to all eligible taxpayers. So just like a child tax credit. Okay, so if you're eligible, and then you should get that tax credit. So, and if they terminate this early, so then for those eligible taxpayers who hasn't had who for whatever reason, so which I don't even go into that, there are many legitimate reasons so why many businesses still haven't claimed the ERC yet, but they are eligible, and so then it'd be unfair if this tax program is terminated early. Especially given the fact that IRS is implementing additional safeguards, so then that would prevent, hopefully, would prevent to a huge extent, or maybe even, so would at least reduce the possibility of fraudulent or improper claims. So even given all of those, IRS's additional effort, IRS is still trying to terminate the program early. We don't think that's fair to those employers who are truly eligible, just haven't claimed the ERC yet. Okay, so then if the program's terminated early, so then and then also if the employer were assuming, those were the April 15, 2024, 2025 were the claim deadline. So then those taxpayers would be basically unfair, taken away their rights to that credit if the program is terminated early. And so, in fact, in our own firm, in our own practice, so we actually have encountered a client that just realized their eligibility for a couple quarters of the ERC, and just 2 days ago. So, and then we actually have some other clients that they have determined they're eligible and recently, and then they are about to claim those credits. So now there is a moratorium that's putting a stop on the processing of the new claims, and so if the program is terminated early, so then that will be unfair to those employers. Okay. Let's see. Okay. So the second item under the IRS agency level issues is IRS actually has a ERC web page and quite a Q&A web page. So, and then one of the items, especially about the fourth quarter 2021 ERC eligibility, we believe it contains mistakes, and in fact, it contradicts its own guidance that were published earlier. And so, in the current IRS Q&A related to fourth quarter 2021 ERC eligibility based on the so-called recovery startup business criteria. So IRS, the Q&A, the answer part states that to be eligible as a recovery startup business, or for short, I'm going to call it just RSB, and you can't be eligible for ERC under the other criteria, basically either full suspension test or the which is government order test, okay, under the government order test, or the gross receipt decline test. Okay, so and then in fact, IRS just rephrased that statement as that an RSB can claim ERC only for the third and the fourth quarter of 2021, meaning that it cannot claim any prior quarters ERC. And we believe that position, that answer is incorrect in light of the IRS prior publication, IRS Notice 2021-65, because in that notice, IRS says that, and IRS actually made a distinction between the claim of a quarter 4 2021 ERC and a quarter 3 2021 ERC based on being a RSB. Okay, so for the third quarter 2021, if you're claiming the ERC as a recovery startup business, the law did say that, so you cannot claim other quarters. Basically, you cannot use other criteria to claim other quarters ERC. Okay, so then if you claim third quarter 2021 ERC, and that pretty much rules out the possibility of claiming any prior quarters ERC. And but we know that the ERC are those businesses that started after February 15 of 2020. So you could be, have start your business in March of 2020. So you can be an RSB, right? So then you potentially could also qualify for ERC in other quarters, even the quarters before the third quarter 2021, okay? So it could be any quarter in 2020 or first and second quarter of 2021. So if you are a recovery startup business and if you claim the third quarter 2021 ERC as a recovery startup business, so then the law did say, so you could not claim the ERC in any prior quarters, basically, okay? But for fourth quarter 2021, and the rule is different. IRS actually clarified in its notice 2021-65. It says for fourth quarter 21, you can still, you can claim fourth quarter 2021 as a recovery startup business. And in fact, for fourth quarter 21, that's the only way to claim the ERC because the Congress has repealed the ERC for the fourth quarter 2021 based on the other two criteria, which is the government order criteria or the sales drop or the gross receipt drop criteria. Okay, for fourth quarter 21, being a recovery startup business is the only way to claim the ERC in that quarter, okay? But the law allows you to still claim a prior quarter's ERC based on other criteria, okay? For example, the first quarter and second quarter 2021, you can actually use a sales drop criteria, okay? Just compared to your sales in 2020 instead of 2019. So that's actually, a provision that's in the law, okay? And so, but IRS is the way it's stated about the, this question and answer seem to rule out that possibility, okay? So if you claim the third or fourth quarter, you basically cannot be claiming other quarters ERC. So that seems to be what IRS answer is saying. At least it's not clear. It's ambiguous in that regard. And so we believe that's a mistake, that clearly contradicts IRS own notice that in the 2021-65. And related to the prior item about the fourth quarter, about confusion about the fourth quarter 2021 ERC as a recovery startup business. And so there's also a line item on the 941X form, line 31B. So that 31B is actually also ambiguous. Let's see. All right. So that 31B requires you to check that box. I mean, I didn't, when I snipped this picture, I did not put that box in here, but there's a box after this description. You're supposed to check if that's applicable. So you're asked to check that box if you're eligible for the ERC in the third and fourth quarter of 2021 solely because your business is an RSB. Okay, so solely because I guess that we could interpret it as that if you, let's say, claimed, if you're eligible for the first quarter 2021 ERC based on either government order or sales drop, okay, and then if you claim that, so then you're not solely, okay, and so. But of course, you could also read that your claim third quarter, fourth quarter solely because you're RSB. So then, so do you check this box or you don't? If you claim the first quarter 2021 ERC, or actually if you claim the third quarter ERC based on not based on being a RSB, but based on sales drop. Okay, let's you claim third quarter ERC based on sales drop, and you claim fourth quarter ERC as an RSB, do you check this box or not? I think that's ambiguous, to say the least. And in fact, we have seen, that situation like that. So a business claimed ERC in the third quarter 21 based on sales drop, okay, and then they are also claimed the fourth quarter ERC based on being a recovery startup business, and then in the fourth quarter claim, this box wasn't checked, and then actually IRS rejected that claim, reject the fourth quarter claim, saying that you must check that box if you're RSB. Okay, so I think there's ambiguity about that item in that particular situation I discussed. And also you might wonder, if you're claiming third quarter ERC, and as you are RSB and you are claiming third quarter, why don't you just go ahead and claim, just to check that box anyway? So then you just claim both third and fourth quarter ERC based on being a recovery startup business. Well, the problem with claiming the third quarter ERC in that particular situation is that if you claim as a recovery startup business, then the total ERC amount is capped at $50,000. Okay, so if you have say $200,000 of qualified wages, okay, so in the third quarter 2021. And if you are claiming based on the sales drop criteria, so then there is no limitation on the, and there's no $50,000 cap on the total ERC in that quarter. Okay, so if you have $200,000 qualified wages, and 70% of that would be $140,000 ERC, so you could claim $140,000 ERC in third quarter instead of $50,000 ERC in that quarter. So then in that, I don't want to claim the third quarter as an okay, you don't want to claim the third quarter ERC as a recovery startup business. Okay. All right. So that's the three items I want to discuss under the agency-wide, IRS agency-wide. Again, I don't want to call them errors. Okay. So, but so they are mostly either ambiguities or some unfair positions, or what we believe to be unfair positions that IRS is taking. All right, but at the agent level, okay, so at the IRS processing agent level, so we have seen some mistakes. These, of course, are clearly mistakes. These are specific mistakes. All right, so the first one of those is that we have seen IRS rejecting ERC claims with a very vague reason. Okay, so this is an example. So it says, oops. And okay, so for example, in this rejection notice, I simply says that we cannot process your claim at this time. The allowable credit, the limitation, exceeds the amount reported, and please resubmit the claim with the corrected numbers for line 18A, line 18, 26, or line 30 for review. Okay, so basically, if you put the correct numbers, if you put the correct number, IRS can just give you this notice and let you guess. So even if you did make a mistake, so this doesn't tell you anything. Okay, so which number was wrong. But let's say you made some whatever mistake, either calculation mistakes or you just made a typo, and so such a notice does not tell you anything. Okay, and so just for those who are unfamiliar with what those lines mean, okay, so the line 30 is the total qualified wages. Okay, so from the total qualified wages, you can calculate the total ERC either the 50% or 70%, depending on whether it's a quarter in 2021 or 2020. And so this total ERC is entered into line 27, okay, which is not mentioned in this notice here. And then that total ERC is split into two lines, line 18A and line 26A. Okay, so that line 18A and 26A is a split of the total ERC, and then the 18A is based on the Social Security tax unless it's third quarter, fourth quarter 21. Okay, so it did, but I should say, let's say either the Social Security tax or the Medicare tax. Okay, the employer portion. And so then, in fact, in this particular example, we triple or quadruple checked. There was no mistake in the calculation or the preparation of the claim form, but IRS just sent you this notice anyway. Okay, so then you're left guessing how, well, you're not just guessing because your claim form was correct, and so you're just left guessing what you should do. Okay, and in fact, we made multiple attempts. We still haven't been able to resolve that with IRS, and also we're not alone. Okay, so we have been contacted by other firms who help the client claim the ERC, and then they are receiving the same notices from IRS. And we discussed, so their claim, in our judgment, is also correct. So then IRS rejected anyway. And in fact, in all those examples I'm talking about, the client actually claimed multiple quarters, okay, more than one quarters, and the other quarters, the ERC was processed without any problem. Basically the same calculation, the same format, so that was processed without any issue. But then for one particular quarter, somehow the IRS sent such a notice, so basically, and then especially when you realize there's no mistake, and then you're kind of stuck with this how to resolve that issue. All right, so that's one processing, what we believe a processing error. And then the other one is for third quarter 2021 ERC. Okay, so we actually discussed this previously in our second webinar on ERC compliance. So we mentioned that so in general, to claim third quarter 2021 ERC based on the government order criteria, that in general is questionable, simply because almost all states had opened up at some point during the second quarter of 2021, if not early. Okay, so some states actually even opened up before that, and then almost all states had opened up their state, meaning that they have listed all the social distancing or whatever capacity or business restrictions at some point during the second quarter of 2021. So to claim the ERC in third quarter 2021 based on the government order criteria, so in general, is questionable. Okay, so then you really should go back and check if you're in that situation. You should check your third quarter 2021 ERC claim. And I think for that reason, so IRS is processing those with suspicions. Okay, it's processing all third quarter 2021 claims based on the government order with a suspicion. But I think some IRS agents, the processing agents, mistakenly extend that suspicion to those claims based on sales drop. Okay, and so because those agents may mistakenly think the only way to claim the third quarter ERC, the third quarter 2021 ERC, is to be a recovery startup business. So otherwise you don't qualify for that quarter. Okay, I believe some IRS agents are making that mistake, as shown in this particular example here. Okay, so in this particular example, this is for third quarter 2021 ERC, and so it's saying that the IRS notice is saying that we cannot process your ERC claim because you did not check box 31B indicating you're a RSB, or recovery startup business. Okay, and then in this particular example, that business is not a recovery startup business because that business started either in or before 2019. So that's not a recovery startup business, and it was claiming the third quarter 2021 based on sales drop, not based on government order. It's based on sales drop. And in fact, that reason was clearly explained in line 43, okay, on the form. Line 43 is the line for you to, for taxpayer to explain, on what basis you're making this amendment. Okay, so 941X, that's an amendment. And so, you have to explain, if you're claiming ERC, you have to explain, why you're eligible, and then, how you did your calculations and things like that, right? So, and in line 43, in this particular example, that reason was clearly given, okay, for third quarter 2021, was based on the ERC eligibility, was based on sales drop. But I'll send you this notice anyway. Okay, so that clearly is a processing error in our opinion. And okay, so the last item, the processing. Again, I don't know whether it should be called an error or not. Okay, so the refund checks, basically IRS has already processed the ERC claim, so there's a credit sitting on client's 941 account. But we had contact IRS multiple times, so then the client's still not getting that refund check yet. Okay, so then every time we call, the IRS agent is blaming on the prior agent. So, that something was, I guess some information wasn't correctly entered or something like that, so that caused the delay. So then the one that we're talking to basically says, oh, I am correcting that, and so you should be getting that refund check, let's see, 30 days or something. But after 30 days had passed and the client still didn't get it, and so we had to contact again. So then a third agent would say, oh, the prior one still, something was wrong, and then so it takes probably 4 or 5 times. In one example, it took us probably 5 times for the client to eventually get that check. And we still have a few that are in that situation. They have the ERC credit sitting on the account. It's being processed, and somehow there's a delay in the issuance of the refund check, right? And so we hope the IRS will take some measure to fix that procedural mistake at the agency. All right, so that's all I want to talk about today. So, so as I mentioned earlier, so this is our website, communitycpa.com, and you can find all our webinars at the links to our webinars at that webpage. Okay, or you can go to our YouTube channel, Community CPA's YouTube channel, subscribe to that YouTube channel, and to find more information about about other webinars we talk about. And if you need more information from us, you can contact us at the general email box, Catherine@communitycpa.com, or call us at the 515-288-3188. And I see if you like our webinar, any of our webinars, so please give us a thumbs up. Thank you, and see you next time. Bye now.